All right, everybody, welcome back to episode, where are we? Episode four, episode five. Forgive me, I've been busy. Episode four with my beautiful special guest, financial advisor Shay Curtin. We want to thank you for joining us today. Um, we're going to dig deep today, guys, into financial literacy, what it means to set goals and plans for yourself, and who better than to have one to break that down for us bit by bit than Shay. We've known each other, I think, since 2008, 2009. So there's a great history with us. But again, I'm blessed to have the network of people that I actually know. I made a post not too long ago using my phone contact. I think I have about 1,166 numbers in my phone. I call it my power base. Your network equals your net worth. And again, who better to have on the show today than my good friend Shay? So thank you for coming in. Thank you for joining us. Shay, I would like you to introduce yourself to the people, and let's talk about what life is like as a financial advisor.
Thank you, Jay. I'm so excited to be here. I'm excited. I'm honored. This is something that I'm super passionate about. Financial literacy is, the foundation of where we start to become comfortable in our own personal financial situation. And that empowerment is exciting, and it stops becoming something that you're afraid to talk about, or you're afraid to act upon, or even embark on that journey. The more knowledge you have, more confidence you have, and the more you can position yourself better for success. So I am a financial advisor at one of the largest financial institutions in the world. Not only do we do wealth management, we also do private banking, a lot of exciting stuff. I have been in the industry for almost 15 years now, and my title is financial advisor. I am a licensed financial advisor. I have my securities license, insurance licenses, mortgage brokers licenses, lots of licenses, for fiduciary responsibility, which means I'm held to a higher standard of the law. And I'm always required to put clients' needs and goals in front of everything else. I'm also a part of my firm's global sports and entertainment division, where I have the ability to cater to the unique needs of athletes, entertainers, artists, and really leverage the resources at my firm for those individuals that have very unique needs than, say, an employed retiree, pre-retiree, right? And then I also have my NFL Players Association designation, which is another heightened designation that you achieve after you've been in the business for so long and you have no marks on your licenses. And that means that NFL agents are able to refer me to their clients. You can only have that referral relationship if you have this special designation.
Good deal. So thanks for the proper introduction. I hope you guys were taking notes. There was a lot there that was just said, but to break things down a bit more for our viewers and people who are just maybe coming into large sums of money, what's one of the first things that a person should do? Let's say you win the lottery, right? Let's say I win the lottery, it's $300 million. What's one of the first things that you would advise me to do as my financial advisor?
Well, lottery winners, that's a unique situation.
Right.
And at my company, there is also a special designation that you need to have to be able to work with lottery winners, right? Because their circumstances are extraordinary. But as you mentioned earlier, a lot of individuals are coming into wealth now. Perhaps a family member. We're in the process of the largest generational wealth transfer in the history of ever, right? So the baby boomers are now going to bequeath their monies, their investments to their children and children's children. So we're in the midst of that now. And so for those individuals, or to make your point, even a lottery winner, The first step is to find a professional, a licensed professional that you can go to FINRA and do research, and you can find out, one, that they have a license, and two, get a little bit of an idea of their history in this business, how long they've been in the business, where they're licensed, what states they're licensed in, and certainly you want to make sure that they don't have red flags and marks on their license. In the securities industry, your license is your livelihood, and if you have a mark on your license, it's like a tattoo and it will never go away, whether the complaint is valid or invalid. If you have any clients or business situation that arises where something happened and they make a written complaint of it and goes on your license, it will never come off. So this is a very litigious environment we live in, and certainly my industry is not, they're not without its fair share of people who are looking to,
Right.
Whether it's legitimate complaints or not. It's
right.
You got to cover your tail.
You want to be protected, right?
Yeah, and that comes into where you make sure you're doing business with people that are good people and aren't going to have to worry about them putting your license and your livelihood in jeopardy because of.
So there's a certain standard, without a doubt.
For sure, yeah, okay. Absolutely. You know as well as I do, and both our businesses, there's not all money's good money, not all business is good business, and we've got too much on the line at this point in our lives and our careers, certainly, to jeopardize that for anybody or any amount of money. Your reputation is everything you have, and certainly that trust component, and then certainly the license component plays a very big part in my career.
I totally agree. Let me ask you this, based on the firm and what it is that you do, what's the philosophy there, you know, when taking on clients? What's just the overall philosophy of the group?
Yeah, our business proposition and the philosophy of the firm is to always do the right thing by the clients. That's the first and foremost. And you've got to be able to have the resources to provide the clients with the services that they're looking for, keep the communication open, honest, and also manage their expectations realistically. If someone came to me and said, Shay, I would like to open an investment account, here's $1 million, can you double this in a year? If someone said yes, that they could double that money in a year, run as far as you can in the opposite direction of that individual. Right. You've got to be smart, and I have to manage these expectations realistically. My value proposition, personally for my business, is I'm looking to help individuals achieve their financial goals and do that in a way where I can show people that you don't have to sacrifice your value system to be able to achieve those goals. And it's an exciting time where we've got investment strategies available to everybody, where you can actually align your values with your investment goals and objectives and be able to achieve those investment goals without have to, turning a blind eye to something that doesn't feel good inside of you. Right. Yeah.
Good stuff. So as a client, we want to make sure that we can at least trust, well, not at least, we definitely want to be able to trust the person that we're going to.
Yeah, right? Trust is the foundation.
Right.
Yeah, so you want to be able to trust them. You want to be able to think that they're competent. And then the third thing is you want to actually like the person that you're working with, because I think at this point in our lives, we could go and do business anywhere we want to, right?
Yes.
My firm, the firm next door, and down the street, we more or less have the same investments to offer our clients. But they're working with me because they trust me. they find that I'm competent, and they actually like me, and I like them. I don't want to be at a point in my life where the phone rings and it's a client that I just cringe and don't want to do business with. That's not a good quality of life, right? Perhaps earlier in our careers, we've had to, thug it out and work with people that perhaps didn't feel good. But now at this stage in life, and life is short and fragile, and time is very valuable and limited. I enjoy working with people that I like, and I'm lucky enough that I can say I only work with people that I like.
Good deal. That's important as well. I think, and the whole base of this show is to give back to the people who basically just don't know. They're people searching for these conversations and this information that we're sharing today. So going with your gut or your intuition is also a big part of everything that we do on a day-to-day. If it doesn't feel right, don't move forward with it. And I definitely like that you made that point. Let me ask you, another question here, Shay. Can you give me an example of a time when you helped a similar client make progress in their investment or with their financials?
Yeah, every day. It's the most rewarding and exciting part of my job, to be able to help clients, whether they're high net worth individuals or people who are starting from little to nothing. We work together to come up with a financial plan that's going to help them achieve their short-term and long-term goals, and that plan has to be flexible and nimble, because life happens, right? And you've got to be able to react to it, and your financial plan has to be able to react to that as well. Right. And it's been exciting. I'm fortunate, having been in this business for almost 15 years now. I've been able to work with families, 3 generations of families, so grandparents, parents, and now their children, and to be able to help set them up and make sure that their money is now being looked after for the people that they care about the most is really cool. And being able to retain those relationships, as opposed to when the grandma dies and the parents inherit the money, are they going to go, to someone else? So that the fact that they chose to work with me and continue those relationships, it means a lot. So having clients that start with nothing and retire is awesome. I've got clients that are first generation migrants who came to the United States with nothing, not a dollar in their hand or their pocket, and end up retiring millionaires. And those stories are amazing. Or my friends who I met them and they didn't know an investment from a hole in the wall, and now they're able to have well-versed conversations and be proud of it. Because once you have this dialogue, right, we're trying to take the stigma away from finance, and investments are so complicated, or it's only for the ultra wealthy. You don't need much to start. And I think that's what this last year really showed us. And the meme stocks and social media, I think, did a great job. It goes both ways, right? But social media did a great job of really showing people that it's more accessible, and you don't have to be super wealthy to be able to participate in the stock market and investing for your long-term future.
Right. Yeah. A lot of millionaires were made over the last year.
Sure. But on the opposite end, poverty is at an all-time high. In over 60 years. So there's 2 ends of the spectrum, right? And it's up to me and you as an educator, and pillar in the community, to help bridge that gap, right? Because what good are we if we're not helping the people below us come up? And let's do this together, and let's pool our resources and pool our contacts to really be able to help each other. If my brothers and sisters, my community members are struggling, that doesn't reflect well on me. Right.
You're not successful really if you can't help those around you. You know what I mean? And this is why we do this. We want to assist as many people as we can one, and two, we want to help the people that want to actually be helped. You know
Yes.
what I mean? So again, this is a huge blessing to be able to share the information that we're sharing today. And for those of you that are listening in or just tuning in with us, if you go back to episode 1 up to today, we have generally touched on every topic in hopes to assist people. So every time we come, on the Boss Talk, it's always going to be something different. We may revisit a couple of these topics, but it's always to put new information out there so that people get a better understanding, because that's really what separates everybody, is the information and the knowledge that you have. There's a quote that says, knowledge is power, but the truth is applied knowledge is where the power is. So applied knowledge is power. And how do you go about doing that? You get educated, you get the knowledge, which is going to empower you, and then you apply that knowledge so that you can really become powerful. And again, I'm grateful to have a friend like yourself who has done what you've done for the amount of time that you've done it. Thank you for allowing me to have you on as a guest today. I still want to ask a couple of more questions, if that's all right with you. I know
Absolutely.
You're busy.
No, I've been excited for this. Ever since you asked me if I would participate, I've been super hyped because if people look to you, they're going to pay attention to what you're talking about. And we're now about sharing information, right? Because there's no shortage of information. We're in the information era, the internet has done wonders, but people are looking to get a cosign, right? And to be able to source information from somewhere reliable, right? Mm-hmm. And so certainly when talking about investments and participating in the stock market, just because you saw it on Instagram doesn't mean that it's real, doesn't mean that it's factual. Just because you saw it on TikTok doesn't mean that that's like real life. And so, consult with people you trust, consult with people that you see are doing well and have similar value systems to you and that you trust, and people who are doing the right thing when no one else is looking. Like those are the people that you want to be down with and have those honest conversations with and help empower and uplift each other and make connections.
Awesome. So next question for you. As a client,
yes.
How often are there reviews done on the plan that's been created for them to make sure that everything is following, the original plan that's been set?
Sure. It totally depends on the client and where they are in life. Certainly like retirees who have plans in motion, or true retirees or even younger individuals who are able to just put portfolios together and go in the market. And we're really, really lucky at this point in time where we used to have really big account minimum sizes to have professional institutional money management. So what that means is you've got a big financial institution running a portfolio for you. So, whether it's a fund that has, 30, 40, 50 stocks in it, or if it's a managed portfolio where you have all the stocks and you can see them outright, we can hire these professional money managers or fund managers, or even passively and invest in an index, and know that someone's working on that, right? And know that those funds and those stocks are being actively managed depending on what's going on in the environment, right? So I run some strategies with clients where we need to talk once a week. If we're doing options trading, we've got options that expire quarterly or have the ability to expire quarterly and have to be replaced. And these are income generating investments. So clients who are depending on me to generate the income that they live off of, I have to be on top of those portfolios so that when the opportunity arises that cash is available, I need to put that cash to work immediately because these people are counting on this to literally like live off of, right?
Right.
So those people I talk to more often. some of my clients who are younger, who are just beginning their investment journeys, will speak a little bit less frequently because their portfolio is in motion, right? And maybe they're dollar cost averaging into the market. So, once a month they put $100, $500, $1,000 into their investment account. And every month on that same day, they put the same amount of money in, and we've got a diverse portfolio set up. So no matter what's going on in the market, right? If it's up or down, they keep contributing that money over time, dollar cost averaging. You'll be able to make those gains on those portfolios and mitigate some of the risk in the markets. So it totally varies. I'm sorry that was a super broad input. Yeah, but
no, that's good. I mean,
but some clients who don't have obviously the basis of the financial plan, we've got to know what our budget is, what's our expenses and our liabilities. And your budget is like the framework, it's like your Bible of your financial plan, right? And if you can't adhere to that budget, then the rest of your financial plan is going to be messed up. So we've got to make sure we adhere to the budget, keep our expenses down, live below our means, get a side hustle if we need to, so that we can afford to not just have savings, but also then begin our investment journey. Want to make sure our debt is low. No double digit teens, 20% of debt, which is typically credit card debt. We want to make sure that is as low or little to none as possible before we begin our investment journey in the market, right? Because you're not going to be chasing your tail.
Right. So get out of debt.
Yes.
As much of it as you can.
Yes. So if it's low interest rate debt, that's cool. That's fine. It's good. It's healthy. So like student loan debt is relatively low. A mortgage, relatively low. But it's the credit card debt, especially, that's inherently expensive. Right now, we're in basically a zero interest rate environment. And what that means is that it's cheap to borrow money. So if people are getting loans from a bank for a car or something like that, and your credit is decent, you're not going to get hit over the head with the high interest rate. You'll still have a relatively low interest rate, and that's fine, and you need a car. But your credit card debt, which United States Americans are really, really swimming in, that debt is very, very high. And the amount of interest that those individuals are paying is really high. So before you really begin that investment journey, certainly take care of that debt, that high double-digit debt.
And learn to be a disciplined person. Discipline is going to assist you with getting through.
Absolutely.
Let me ask you this. To assist people further, are there any books, any articles, any references that you can share for like beginners, people that are looking to understand? Anything you can reference where someone can go and research and get a better understanding on how to get themselves. And
I recommend everybody do their own research. The very first step and the first thing that I would tell a person who's interested in either, introducing themselves to taking their personal finances seriously is just go to Google and Google a personal budget. That's literally like finance 101. Get your budget in order. And when you do that, add up the numbers. When you add up both numbers, do you have a plus or a negative? If you have a plus, you've got a surplus. And then you can consider things like, making sure that your savings is in order before you start investing, right? Because you want to make sure you have at least 3 months. The good rule of thumb, though, is 6 months of savings. So whatever 6 months of your expenses are, no matter what, have that on the side, right? Because this last year was a perfect example of why we need to have our proper savings allocated, because, everything was good, right? 2019.
Yep.
Everyone's making money hand over fist, markets soaring, economy soaring. And, it was like musical chairs. When the music stopped, did you have a chair?
Right.
You have that savings. Did you have that safety net to help you mitigate these uncertain times? Certainly people who work in hospitality and service industries who just got hammered, and those people are already living paycheck to paycheck, right? So have your savings at least 6 months to play it safe. And then that's when you really can start looking into investing in the stock market. And again, you can start really small and whatever you can comfortably commit to, whether it's $20 a month, $100 a month, start somewhere. If you have an employer that has a 401k, certainly that's like free money, and you should absolutely participate in that. Because when you get hired, and if your company offers you a 401k, that's a part of your employment package. So they offered you a $100,000 salary and a 401k plan. They're taking that into consideration when they propose your salary and your benefits. So do that. And if your company doesn't have a 401k for you to participate in, I would certainly recommend people start out with an IRA. If they're self-employed, a SEP IRA or Roth IRA. Up until the age of 50, you can put away $6,000 a year, and that's tax deferred growth. So you don't have to pay taxes on the gains of that money until after you take that money out when you're 59 and a half years old. If you need to take that money out beforehand, out of an IRA before 59 and a half years old, you'll get penalized 10% and have to pay the gains pay the taxes on the gains. If you, however, there's exceptions to the rule for taking out that IRA money early before 59 and a half, for instance, first-time home buyers, the IRS gives you a break. Education needs, government gives you a break. Certain medical expenditures, government will give you a break and not tax you that 10% penalty, but starting to really take advantage of these things that are available to us.
Listen, this, I'm sure this episode is going to be shared and viewed millions of times because I'm learning, you know what I mean? I'm learning a lot as we're talking. And again, I appreciate you for sharing all of this with us.
Sure.
Guys, listeners, people that are viewing, I hope you have your notepad and pens out, taking notes. If not, just rewind and go back to your favorite parts of this special episode. Shay, again, I want to thank you very much for allowing us to sit and talk with you today. Anything else that you want to leave us with?
Yeah, I would say for people who are interested in learning about the market, the stock market, investing in the investment world, or if you're intimidated, I would say just you don't have to dive in willy-nilly all at once, right? So, maybe just commit like an hour a week to committing to getting your financial orders in check, or commit an hour a week to learning about the economy and Intro to Investing 101, and go to legitimate information sources, big companies. Blogs, sometimes they have like a hidden agenda. They get paid to write things in favor of one thing over another. So be wary of that. But it's not for the wealthy. It's not for the super sophisticated. It's for everybody, and it's never too late to start.
Right. Good deal. And I think that's perfect. A perfect note to end on. It's never too late to start. You can start right now today as you're listening. You can open another tab. You can get on your phone and Google this information and start learning right now. Shay, again, thank you very much for joining us today on Boss Talk. We really appreciate you and the information you shared with us today. Guys watching at home or listening, please be sure to like, subscribe, and share this information with somebody that you care about. Again, we're doing this because we care about you. Again, I'm your host, Jay Porter. This is Boss Talk. Catch you next time.